Hi everyone, my name is Slav and I do company reviews here on YouTube. I do some analysis and I also have a public account that I share with everyone. I've had almost 500 episodes now updating my public account to everyone. I have cut my teeth trading silver back in 2009, 10, 11, and even 15, 16 period. So I have traded this commodity quite a bit in the past, and I want to share some insights with you. First, a reason why I'm actually bearish on the metal, and I don't think that we're in the cusp of a new bull market, barring an outsized event of fiscal proportions. So, namely, if something goes wrong with the currencies or the banking system, barring that, I think we're actually not going to be experiencing too much of a bull market. It's probably going to be a sideways to actually down market as this mini banking crisis boost dissipates. And I have some charts. I'm going to talk about it. I'll talk about some supply demand stuff to illustrate my point. And I'll share with you a trick that I use to make money through silver almost every time. And I have gotten the opportunity to do it this year, but I didn't take that opportunity. However, I did take it in 2020 and 2015 and 2008. So I'll tell you about what I'm looking for and how you can make some cash too. So going into the browser, I'm just showing a chart of a silver basically. Let me put myself in the other corner. No, that doesn't work. Okay, so this is the silver chart. Point number one as to why I'm bearish on the metal is because the price is just elevated. Prior to 2020, the price had stabilized from 2016, 17 to about 2019 in this like $16 to $20 range, and silver seemed pretty happy there in almost an equilibrium state. And then of course the supply issues of 2020 jarred things up. People started rushing to buy everything because supply was interrupted, and we experienced a bit of a spike. Now I'm going to follow along with the story here with my mouse cursor, and this is the spike here. Quickly the price moved above all kinds of technical levels, and I'm not a technician, so I don't use technicals to trade, but I just want to illustrate a picture. So after that, the trade has been unwinding until basically the beginning of this year. If I go to the year chart, what you'll see here is silver was getting crushed in early March when the banking crisis unfolded. So I want to talk a little bit about the mechanics behind that. All right. So the reason that happens is the reason silver and other precious metals like gold usually go down initially right after financial problems is because whoever was leveraged needs to unlever, and basically everybody sells everything. They press the sell button, they try to raise cash, and things like silver and gold are usually very liquid and very easy to sell, and so they dump it in order to raise cash to survive any kind of incoming calamity that could occur. And so that's the initial bump down, and that is actually part of the trick that I was mentioning earlier. I'll share with you now, is whenever that happens, whenever there is a little bit of blood in the financial sector, there is that little initial dip, and sometimes it happens before you're aware of it, right? Because the insiders tend to dump all of their precious metals before everybody else knows. So all you see is kind of a sharp-ish price decline, and that is basically a cue as a trader to go in and buy. Now, sometimes you don't need to know necessarily what's going on in the market. You just need to see strange behavior in the price action and a swifter than normal selling. So that is your cue, and that's when you want to load up. I have in 2020 I did this with buying calls basically on silver. In other periods I've just been buying the SLV, or I actually used to play the silver miners for leverage. My favorite silver miner was EXK to do that with, because I knew the company very well, and I like to mix fundamentals with company knowledge in order to be able to trade something well, to take advantage of it. Not so much technicals, but just price action and fundamentals. So and then you can just ride the spike up before, above the previous price level, and then look for an exit point from there. I like to scale out, so I'll sell my initial positions, maybe half of it, when the price surpasses the previous price before the initial drop, and then I'll try to sell a little bit, a set percentage for every few percent that silver goes up. Okay, so that is the trading strat here, the trading trick that I've used to consistently make money over the years, but it only hits us every once in a while, so it's kind of a rare occurrence. But anyways, here's why I think it's not a steady bull market for silver. So number one, as I mentioned, the price is just elevated. I understand that we live in a different world. The dollar is not worth as much as it used to be. Inflationary pressures, it's not transitory, it's sticking. But even if it is transitory, by the way, I want to explain that. Even if it is transitory, what that means is there's just like a one bump in inflation and then prices stabilize again. So that one bump is permanent. It's not like there's a deflationary pressure that's going to follow that inflationary pressure to go back to whatever it used to be. But anyways, and another thing is, just in general, silver, another reason why I'm kind of bearish on it is because as technology improves for mining and people get more and more efficient, the trend of silver is actually down. Like overall, trend, inflation adjusted, is down. The only reason why it stays pretty elevated in the long run is because of inflation, really. So I just want to make sure people know that. You can see that in other commodities, like in just purely industrial commodities like copper, that things get cheaper overall in the very, very, very long run, because of efficiencies, right? Even if demand gets higher, the efficiency at producing that specific metal or commodity improves, and faster than the demand improves. All right, so elevated price, got it. First of all, that's one reason why silver doesn't make a very good long-term investment. If you want to do long-term investment, I would suggest doing something like gold. I think that's a much better long-term hold, for many reasons. Number one, because it doesn't dissipate, it doesn't tarnish. Okay, but that's just my favorite reason. The joke there is it's a very small amount, obviously, that silver tarnishes away each year. But the fact that it oxidates and it reduces the total amount of silver you have, every millisecond, right? Some kind of degradation happens there. Just that fact, just kind of always irk me. If I'm going to be holding something for eternity, I want it to last for eternity. Okay, anyway, that's just a little side note here. But gold does make a more suitable instrument to hold long term, and it's more ingrained into the banking system. Like banks hold gold, so it's more of a traditional hedge against instability, and gold is very liquid and everybody will trade gold with you, whereas silver, not absolutely everyone would do trade with you into their local currency. Okay, moving on. Oh, by the way, Global X Miners ETF right here, SIL, also down. I was tracking the SLV, by the way, which is an exchange traded fund that is correlated with the price of silver. This is SIL, and it also makes a bad investment. It's nowhere near its heights in 2011 at, over 85, over 86 and a half. Now it's down at 27. It's actually below its moving averages. So it's not really signaling a bull market either, if I were a technician. There's another chart there's another infographic here that I want to talk about to share with you why I don't think that SLV is about to be in a bull market anytime soon. And it's just the nature of silver demand. So here's the chart. This one breaks down the demand based on type of demand that silver is experiencing has experienced in previous years. So the bottom part here, I don't know how clearly you can see. You can probably see this better on the desktop rather than a phone, but if you zoom in, maybe you can see the bottom part is the industrial demand. It's held fairly steady all the way through 16, and then a slight increase in 17, 18, 19, a dip obviously in 2020, and then a sharper increase in industrial demand in 21 and 22. Now that demand is likely to be fairly stable. The demand for photography is the second bar from the bottom, and it has been decreasing a little bit over the years. So that's probably going to just continue to slowly decrease as things get more efficient in photography, and demand for silver and photo paper just in general is not as high anymore due to, us entering the digital age and whatnot. Actually, I'm not going to even speculate on the reasons. And then jewelry is the second fat bar here, right after the first thin one. Then another fat one right here in the middle is the jewelry demand. That one tends to stay pretty stable. There's a dip, a little bit decrease in 2020 for obvious reasons. People are not just out there buying silverware, they need toilet paper. And so in 21 it kind of rebound. In 22 it actually had a record-breaking year. It looks like from the charts anyways, and that will probably revert back to something like 2018-2000 level, 2018-2019 level. So I'm not really worried about that. The next one is silverware. That was jewelry we're talking about, not silverware. Silverware is actually increased, but moved in the very same way as jewelry. They're kind of tied hand to hand when it comes to their decreases and increases. So 2022 looks like to be a record-breaking, silverware demand. However, that's also probably going to stabilize in the next year. So I see that falling as well. But the bars that I want to talk about is these next ones. Okay, on your screen it will be the second ones by size, second in size, and is this light bar right up at the top. There's only a really thin bar above it that says hedging that's basically non-existent since 2013. So we're going to talk about basically the top bar, and the top bar is the largest right now as it's ever been. The second largest is probably 2015, 2013. Now, bars and coins demand represents the investment public's, desire to hold precious metals, basically. And let's take a look at what kind of years they peaked in holding and buying these bars and coins. Well, 2013, that's like in the middle of the big silver bear market. 2015, which was, still bottoming out. And then 2016, 17, 18, 19, those are the years where silver was actually kind of regaining its footing, right? That's the beginning of the new bull market. And nobody was buying. So no one really believes the bull market. So it's actually kind of intelligent to trade inverse of people's tendency to accumulate bars and coins. What happens is the industry gets used to this demand of high elevated silver demand for bars and coins, and they crank up the mines. They produce extra silver to satisfy that demand, and then when that demand goes away a little bit, everything comes down to a crash. In 2016 things, I think 2015 in December completely bottomed down, and 16 kind of started rebounding. As the price dropped so low that miners were actually not even able to produce silver because they got so indebted, right, and start shutting down. So the supply was actually so diminished that price action started to actually recover even as the bar and coin demand was low. But let's look at what happened here in 2020, 21, 22. We have record bars and coins demand from investors, and that basically signals crank up the miners. And so even though the gold miners and silver miners are in better financial shape than they used to be in the bear market from 2011 to 2015, I think similar cycles are going to be happening. I mean, if this demand is this high and the price only goes up to like, low 20s, then I don't see much more heated action from here. So it's more likely that the price is going to come down with reduced bar and coins demand. And so those are kind of my arguments as to why I think that there's not going to be a new bull market. Like, look, I understand, of course, if there is a currency collapse, if there's banking problems, silver is going to go up, right? Gold is going to go up. Precious metals are going to go up. In fact, anything tangible is going to go up that you can put your hands on, because people lose interest in the currency, at least the investing public, if something serious happens. I'm not talking about those scenarios. I'm talking about things as they are. Another reason is elevated interest rates. Yes, that heightens the risk of something going wrong when the world economy is basically operating on higher interest rates, and sometimes even real interest rates, which they tend to compete, though. Okay, they compete with holding silver and gold, because the opportunity cost of holding interest yielding safe assets is just too great for investors. So they'll flip over their bars and coins, or at least they'll stop buying some and they start loading short-term treasuries, money market accounts, CDs, I don't know, corporate bonds, something that's correlated to those higher interest rate environment. And that competes directly when it comes to investing with holding silver and gold. So there may even be outflows from the ETFs, physical holding ETFs. But I do agree that having those high rates, even though it will cause a steady outflow from the precious metals sector, it heightens the risk of something going wrong in the financial sector, which then of course will cause a spike. But that, in my opinion, is a perfect trading opportunity. So when you see that happening, silver and gold usually tip the hat on something going wrong with the financial sector whenever they start dropping. So before the news hits, if you see silver and gold start to dip, that is your cue. You wait a few percentage points, I don't know, 5, 6, whatever the drop is. If it looks more severe than normal, then you just buy, and then watch on the news the next few days some banking related incident of somewhat big proportions is unfolding. And then you would already have your calls, or perhaps you bought some SLV or GLD or AU, whatever. AAU, there's a bunch of them, ETFs that hold physical gold nowadays. And then write it up and figure out your own exit strategy before you enter. So, you could do that for a spike, but silver long term, even with the EVs and all that, I don't think that the industrial demand increase is going to outpace over the next couple of years. I'm not talking 5 years. I'm just talking over the next couple of years. I don't think the industrial demand for EV, etc., is going to or solar or whatever else industrial is used, silver is used for, is going to outpace the investment demand decrease. I don't exactly know the specifics of how the mining sector looks, so don't quote me on that. There could be supply side issues that I'm neglecting here, but I'm just judging on history and precedent, and just from looking back at my experience over the years from trading silver. So that's my opinion. If there's a spike, trade it on the bull side. But in general, over the next couple of years at least, I don't see like a major bull market in silver resuming, barring a financial disaster. All right, hopefully you got something interesting out of that. Let me know what you think about the silver sector, or silver in general, precious metal sector, in the upcoming couple of years, and whether or not you see green pastures ahead for silver investors or not. All right, peace out.